Okay, well, thank you, David. Thanks for inviting me back. I love doing this live chart segment because this is really what I do. I'm Leslie Jouflas. Trading Live Online is my website. I've been in the markets, trading, developing trading methods and teaching traders how to trade, and both in the method and the mindset, because you can't have one without the other in trading. I am a chartered market technician. And so I've studied since the very beginning when I started back in the mid to late 1990s. Some of you probably weren't even around then. I studied a lot of classical technical analysis at that time. And I really just delved into anything that I could find related to the markets. And like a lot of you, I went through some really rotten courses, but even in the worst ones, I always found some little nugget to take with me. And I did have some really good mentors that I learned some things in the market that if I had discovered them on myself, it would have taken me a longer process. So I'm very thankful for that. And I think that's one of the key roles of mentoring is to help traders navigate, guide them through a process and be able to alleviate time and hopefully some money. So that's what I do, and I'll show you a course that I just put up on a site at the end if you like what I do. So, well, let's get started. So today I picked out a lot of charts, and basically I'm just going to go through a lot of these charts, showing you my analysis of the charts. You're welcome to ask questions. If you have a symbol that you'd like to look at, please let me know. I always start my analysis with the main indexes. The reason for that is if you can get a handle on the direction of the main indexes, that's going to help you in your individual selection, whether it's ETFs or individual stocks. And a lot of the markets, such as the Bitcoin, a lot of the Bitcoin symbols have correlations to the indexes. So that's another reason to be keeping an eye on the indexes, even if you don't trade them at all. I trade the S&P 500 quite a bit. That's like my main market that I trade. And I also hold some individual stocks and ETFs. I tend to separate the account so that I don't have things that are shorter term mixed with longer term. That way I'm not tempted to kind of mix it up. I work with a trade plan. My trade plan is, again, that's what guides me through the markets. I do not ever experience the deer in the headlight syndrome that so many newer traders do. That's because I do what my trade plan tells me to do. If you don't have a trade plan, that's something that I think you might really want to consider. First, ask yourself why you don't have one, and then get help to develop one. And I do help traders with that. So let's start over here. And I've got all these charts. These are sort of organized for me, maybe not for you, but I put them in kind of categories. So I want to start with the SPX, and I'm going to kind of mix up the symbols for the S&P between the SPX, the SPY, and the actual futures market. So we're going to start with this monthly chart, and I'll show you how I have been looking at this. First of all, this March 2020 low here, this is a point that I've been using for retracement since the 2020 high. And I'm going to put that on real quick and show you. So I'm going to take the low and to use Fibonacci in my analysis. I don't use Fibonacci ratios in and of themselves, such as just a pure retracement to a 5.0 or 618. I don't do that. I've never found that that's a viable method. I do use pattern recognition that will correspond with a lot of these levels, and that's a much stronger way to be setting up your trades. There are some patterns that are based on Fibonacci ratio, some extension patterns, and if I'm going through some charts, I'll show you a couple of those. So here we have this retracement from low to the high, and you can see how it traded, got down to around this 0.382, and you see the bounce up. This trend line was drawn, so the market started to the downside. And then once it made the high, we were able to draw this trend line down and across. It's just a little bit off. Sometimes when I'm opening and closing and changing time frames, it changes my trend line. So I'm actually going to redraw it right now because it's important to make sure your trend lines are correct. So I'm going to take the very high and I'm coming across that first high there, this one right here, and then just extending it down. So if you have a ray or something that extends automatically, you can use that. I do have one, but it was just easier to grab that tool. So you can see how after the market hit this 382, it came up to the trend line, tested it, did a teeny pop above, had price rejection, and then traded down to this 0.50. So on a longer term basis, this 0.50 level right in here, especially these opens and closes, are going to be very, very important lows. And if we look at this 0.50 and we look where that's corresponding, we can see back after the 2020 high and then the lows, you can see the market start to break above these opens and closes and this high, and then come back and retest that breakout area. And you can see the clustering around that. Well, we can see from there, if you look at my horizontal cursor to the left where the close was, the open, and even the low of this bar at the 0.50, how they were all retesting this particular price level. This is an important consolidation because this is really where the market, after that consolidation, took off to the upside. And look at that, tremendous swing to the upside, uptrend. So that's an important on a longer term basis. So what the market since then has been doing, it's really been in a large range with very large swings up and down. And it's been testing price levels on the upside and the downside. If we look at this monthly chart, I think that becomes pretty clear. So here's where the SPX was able to get above that trend line, and it closed above on a monthly basis. And then, so there's the close. And then the next month, we opened, market opened, came back down, retested and closed just about on that trend line. And then you see here another test of that trend line. The market opened just about where that close was, back up and closed. We have a close, an open, a close. And then the next month we have a open, and the market formed on the monthly, kind of a harami type of a pattern where this candle real body is within this high and piercing into the previous month's candle. So in March, the open, you can see the open where the close. Notice how that open and close. So this is really showing us where these important price levels are right now. And then another close. This was the first close that the market has gotten above these levels. So now the question, the $1 million question is, does it hold up here and continue higher, or do we come back down in this big range and continue ranging? So we've got really, I think really it's been in a range this whole from here to here to here, a little zip down, zip back up, and then here, 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 here. So I think we can consider almost this entire section a huge ranging process. So when the market is in a ranging type of a process such as this is where really large moves come from. So we even though we have this close above here, see the dash blue line right here? So there's some resistance right there to get through. If we look at, I'm going to remove this. We just looked at that 0.50. I'm going to remove it so our chart doesn't get too cluttered. So if we look now at this high to the low where the 50% retracement is, and now we're looking at Fibonacci retracements to the upside. A couple of things that I notice with these retracements is right around this 382, we get a close above it, close below, close above, close almost on it, open and close similar areas. So it's getting some resistance right around this 0.50 level. And then again, there's this little blue dash line is showing us there's resistance there. Now we just started a new month. So this bar, we're not going to know what that bar looks like until the end of April, but we can scale down time frames and start to get some more information. If we get above this 0.50 and this resistance point here, the next level is going to be around that 4,300. So this high on this bar right here is 4,200. So that's been kind of a big resistance level for the market. But the main thing to keep in mind is that there is this big ranging area and these price levels, these opens and closes right around the 4,100, just below it level. This high right here at 4,200. Um, this open about 39 and a half, the close about the same. So we're starting to see also, notice the succession of the higher lows, higher low, higher low, higher low. So we don't know what this is going to look like. But what that means is these are higher lows. It looks like there's some accumulation that's been happening. We can see that on the individual charts when we scale down. But this low right here is going to be this is an important low, this 3,800 on the SPX. So if you track the SPX or the SPY or the futures, and you're looking at a monthly chart, you want to find what that level is. And then right up here, we have this high just right around that 4,200. So this gives us a little bit tighter range. So maybe we spend some time just trading back and forth in here and creating a smaller range. So let's go down now and look at another time frame. I am going to, where am I going to put this chart? Okay, I think I'll just put it right down here. I do have a lot of charts on here. Okay. All right, so now if we look at the weekly chart, so we just were looking at the monthly chart, so we can clearly see where that 0.50 retracement was. We can see a little more detail around where I showed you that 0.382 was. Here, this trend line, this is using this low, coming across this low and extending this trend line down into the future. And I tend to keep these trend lines on my chart. As soon as this low was made, that's when I had put this trend line in. So that was way back in, over a year ago now. Yeah, I tend to keep these important ones on my chart because you'll find that they do come back into play. So here, after that was extended, you can see the prices around that level. So the price came back up and tested, up and down, through, retest, and test, back down, test. So here it is again. So the market is now above it. But if we create a new trend line here and here, you can see the market is bumping up against that trend line. So it looks to me like we get a close just above this 0.50. We're also going to be breaking this trend line here, and that's going to support the market getting up close to that 4,300 level, where there's a whole bunch more um, resistance, but we'll, see how that plays out. So this level right here, right around this 41 and a half level right here, the 0.50, this has been tested a couple of times, but it closed above here. And I think we're going to see a nicer move to the upside from the based on this weekly chart. Now, oh, let's see. Let me see if we can see this. Okay, the other thing with this chart is, to me, it looks like there is a head and shoulder, inverse head and shoulder pattern on here. The highs had a head and shoulder pattern, and some other patterns. There's what's called a butterfly pattern. I'll show that to you. That's a topping pattern, reversal pattern that's often found at major highs and lows. It also appears on all time frames, intraday charts. If you day trade, this is a great pattern to know and to understand. But now it looks like we may see it left. This is the left shoulder and the head of the pattern, and the right shoulder over here. So there's two lows, and that would be considered kind of a complex inverse head and shoulder structure. So again, this possibly is the neckline for this pattern. We come down here and break that, and we get a good break. Then the next area of resistance is going to be 4,300. So another question with this, and we just have to follow the price movement. We want to follow it up until it tells us it's done. But we would expect resistance around this 4,300 level. And if the market does back off from that, then it may be, just testing that resistance area. There's a difference between when the market just tests an area, it generally will test and might get some reaction back and come back up again. There's a difference between that and price rejection. This test up here of this trend line got total price rejection. See how it just totally fell off of a cliff. The test here, total price rejection. However, over here, notice how that reaction got smaller. And that's pretty typical when a market is just sort of putting its toes in there and seeing, do I like being up here or not? And it just starts to sort of hover and get smaller reactions. So you want to monitor that price behavior. If it does get through this trend line, you want to see it hold above, and then maybe we see some testing back and forth around that 43, but it's got to get above there to really start, moving to the upside. So this also illustrates this pattern, the monthly range that I pointed out. This is just on the weekly chart, also showing us that this is just a huge monthly range. Now, one thing I want to point out to you too is I don't use a lot of indicators, and my theory with indicators is if you have an indicator on your chart, then first of all, you should understand the indicator and have studied the indicator and know where this indicator came from and how it really, the nuts and bolts of it, and not put it on your chart until you know how it either helps you make money, more money, or lose less money. Otherwise, it's just a distraction on there. So I use the RSI in a way that helps me to identify the bullish, bearish, and neutral phases of the market. Right now, the market is, because of these peaks right here, here and here and here and here, is still in the bearish, kind of undecided. It's not extremely bearish where it is anymore, because some of these lows, like this low here, was higher than this low here, and it's been sort of climbing up and now holding this low area. But if this breaks to the upside, then you'd want to see this RSI, relative strength index, start to move above these previous peaks and move up towards that 70-ish area up here. That would be one way to be looking at confirmation. If it's not really able to move too much, then that might be showing us a divergence. Okay, so that's the weekly chart. Just a sec here. Okay, I guess I will just put this one down here. So I generally, actually, a lot of times I'll start my analysis from the shortest time frame and work my way up. That's just how I tend to do things. I think most technicians would tell you to start with the longer and move down, but I do it backwards a lot. Okay, so this chart, now we're on a daily. So we started with a monthly and we went to a weekly, and now we're using the futures chart with a whole bunch of lines, which I'll explain to you, to give us a little bit more detail and a little bit more information. So if we backtrack again to the highs, back to the highs in late 2021, early 2022. This is the butterfly cell pattern. This is the reversal pattern. And this pattern started appearing on the indexes, and there was kind of a succession of them, and also on individual stocks. A lot of the big tech names were completing butterfly patterns back in October and November, much earlier than the actual index. So those were even giving us a warning sign that something was not, you know, sustainable on the upside in the market. So this contains there's a swing, and then there's what's called an A, B, there's retracement, and then the C leg starts in D. So generally the A, B leg and the CD leg are about the same length. They're about equal. However, the CD leg can extend a bit further, and when it does, it's usually by a fib ratio of extension ratio 127 and 1618. But in this case, it was pretty equal. So you can see the market reversed from that pattern. And then when it was ready to rally, there was a little butterfly buy pattern here, and the market rallied off of that and creating the point for this trend line down. So once it fell away, there was that second point in which to start up here, come across here, and extend to out into time. Here, this dash line up here was created when the market earlier this year came up and rallied above this trend line and then fell away from it and retested this important trend line. But notice how price has been staying above this trend line. So that's positive. If you remember, pointed out that this level around 38 and a half area, this is a really important uh, price level for the market. If the market reversed and broke this level, it's likely also breaking this big trend line, and that would be negative in my opinion. But right now, what I'm seeing is that the market is just hovering around this dash trend line. If you remember, I just said that this is part of the testing process. We're not seeing today anyway. I don't know what tomorrow is going to bring, but today it's not getting that price rejection. Remember, this is what price rejection looks like. Here, this is just it's just hovering and testing. And here, when it came to this trend line, so it held it, it'll rally up. And then look at all the hovering that took place on here. And this is a little inverse head and shoulder on the daily chart, left shoulder, head, and the right shoulder of the pattern. So if we take a little trend line, we come across this neckline right here, and extend that out actually to meet this trend line right here. That is, technically the breakout of this little pattern. It's got some more upside to go on a measured target of it. So I want to also show you another daily chart because there's another important level that you should be aware of on the S&P, especially if you trade the S&P. Let me see if I can find, oh gee, can I find another chart? Okay, here's one. All right, so here you get all kinds of swings in the in in the market. That's all the market does. It swings up, it swings down. Sometimes it swings up or making progress. So we have an uptrend. Sometimes they're more swinging down. So there's a downtrend. It can be uptrends, downtrends within big ranges, which is what I think we have right now. So right over here, 40, it's right here where we had, okay, right here. This is a 120-minute chart. And right back here, this is where, let me take a little arrow. This is where the FOMC met and they made their announcement. And there are some tendencies and price characteristics around FOMC announcements. And I think if you go to my website, tradingliveonline.com, I think if you go up to the blog, you'll find a video that I did on the tendencies around the FOMC meetings, but they've been around for many, many years, decades, and they still hold true today. But one of them are these knee-jerk reactions when the announcements come out. So you can see this spike. There was like a spike high, and then it just got slammed to the downside, a little retracement, and then found a low around this 39 and a half level. So when the market takes out FOMC high or low, there generally is a larger move when that happens. So the market had, did a retracement and then came back up, and then it took out this 4073. So I think this is also definitely a price level to be monitoring because a lot of traders, first of all, they got sort of slammed down if they bought on that spike high. But when it came back up, there was buying going on this leg to the upside. So I think this is an important level that might offer a buying opportunity. So one pattern that I'm looking for, I'm going to explain these patterns here in a sec to you, is something like this ABCD buy pattern coming back around that 382. Maybe it slips below it just a little bit. That's okay. But that we've had this big move to the upside, and that would present a buying opportunity. However, we've made some highs here around this 4170, which just created an ABCD sell pattern. So that would be retracing from the low to high down to the 382. And with Fibonacci ratios, when you're using them as retracements, when a retracement holds a 0.382 and a 0.50, especially the 0.382, and then turns around off of it, that's showing you that there's underlying strength in the market. So you want to watch and see, if this pattern holds true. So this is what an ABCD looks like. So if this turns from somewhere around this area where it is, maybe a little bit higher, then turns back down. Once it turns down, then you can, like right around it here, you can really start monitoring the pattern for the completion of it. So this is what I'm watching right now. The other thing on this chart that we're down now in the 120-minute, down a little bit lower on an intraday so we can see even more detail, is with the Fibonacci uh, retracement ratios like 382, 0.50 is not really a fib ratio, but 618, but it's a well-watched retracement, 618, 786, 886. This 886 level, this is what I call the last chance ratio. And it's the last chance that the market has to either turn to the downside or keep going in that direction up to that 1.0 Generally, when it does that, higher percentage of time, it'll break it and start traveling up towards a bigger fib extension. So here, the market has already found resistance right here at with this big sell pattern and turned from there. Uh, so if start to see a close above that level, I have a couple numbers on there mixed up. Which one do we want? So that's about 41.65 to 41.70. So you start to see closes above that level, then expect the market to move up at least to the 1.0 level and very likely in time break that and continue to the upside, probably up to that 4,300 level that we have mapped out. So right now I'm going to be watching for potential buy pattern off of this sell pattern, and we'll see how that works out. Okay, so now let me go. So that's the S&P. So I think we covered that fairly thoroughly, I hope. Let's take a look at the NASDAQ. Let's see here. 5-minute, daily, weekly. I want to start with the weekly. Okay, similar here with the NASDAQ had this big range consolidation area with the highs. Here's a little butterfly pattern in here. I know if you've never seen this pattern before, you probably don't recognize it, but it is in here. That would be X, a B, a C, and a D completing the pattern, along with other things that were happening, as I mentioned, with some of the big tech stocks. So then fell, created this big, huge range, fell out of the range, see the retest, the trend line coming down, retest, price rejection, back up, price rejection. Now the NASDAQ finally, everybody can clap, got above that trend line. And so far on the weekly chart has been closing above it. Here was an A, B, C, D sell pattern just below that trend line. Notice how it got the retracement to the 0.382. So that's what I was just talking about. That's a level that the market holds and then reverses back up. There's underlying strength on there, and then was able to close above that trend line. So next point of resistance for NASDAQ is going to be right about, right up here at these highs. The RSI has been looking fairly good on it, but it's not completely out of the woods yet. Closing back below this trend line, I think would be negative, and then we'd be looking for probably a deeper retracement back down again. So let's go and look at a bit more detail. Okay, so that was the weekly. So now let's look at the daily. All right. So the daily chart, we have this dash trend line coming down. So again, notice how the market did not get the big price rejection. It got was holding, testing, little pullback. That was the 382 pullback, and then went right through it. Now, understanding these patterns and understanding how the market tests and these fib retracements is going to help traders manage the trades. First, they give you a setup to be watching, and you can also quantify your risk and your targets by using these types of patterns and this type of analysis. So now the NASDAQ is had a couple days once it got through here to the downside, and again, probably right around this area. But what I want to take a look at, we have the retracement to the downside from March 2020 lows, and that was at the 0.618. So it was a weaker retracement than what the Dow got, or the S&P got to the 0.50. The Dow got to the 0.50 also, I think. And the NASDAQ was weaker and sold off to the 618. And once it started to turn, then the Dow, there was rotation going on where the Dow that was the strongest then turned to be the weaker one. So now right here, the 0.50 is coming in right around where there was some price rejection. You never know exactly what price is going to do. But if you map out your levels, you can, first of all, it gives you some structure to work with in the market. Also, when you have particular patterns like this ABCD cell and you see it coming into a trend line area, it gives a place to quantify the risk. And it kind of helps you to just monitor the overall price behavior in the market. So if NASDAQ gets like just a little fluttering or it just gets right through it, then the next level is going to be this 618 retracement up here for it. The RSI is doing a bit of a pullback after and had this run to the upside, pulled back, and then started to climb back up again, just slightly lower than this peak on here, but it might just be because it's doing a consolidation here. So what you wouldn't want to see on the RSI right now is to see it start really breaking back to the downside. You want to see it hold up here at these, healthy higher levels. Okay, so that's the NASDAQ. I've got the Qs here too. I pulled this up because I thought there's probably a lot of you that might trade the Qs, and it's very similar to the Nasdaq. So big, again, this big ranging type of pattern up here, same as Nasdaq, fell down. Big ABCD buy pattern led to a rally up to a resistance. Another ABCD buy pattern. It's actually a type of a butterfly pattern, and then ABCD sell with retracement back down, formed this other, we just pointed this one out on the NASDAQ, and now we'll see what happens with this next move, keeping in mind those monthly ranges and where those breakouts are going to be. All right, so let's take a quick look at the Dow now, and I'm not going to spend as much time on the Dow so we can get to some stock charts. And I want to look at your questions also. I see possibly some questions in there. So with the Dow, okay, hang on. See if I can pull this down a little bit more. And let me try it this way. Nope, that didn't work. Let me try this way. Okay, so just using the symbol INDU, and on a daily chart, I'm just going to use this daily chart for the Dow rather than go through all those time frames. But here was a rare pattern called a reverse ascending triangle, big zigzaggy type of a pattern, as H.M. Gartley from 1935 described this pattern. And it did break to the downside. One thing with this pattern and all types of ranging, coiling patterns, triangles, sideways ranges, anything that coils, I like to find the center of the pattern. This one's a little hard because it's more of a broadening, but I think it's right about there. Hi, that looks about right. So when you do that, you find the center, what you're going to be able to see with that is where the market has spent a lot of time, around what price levels has the market spent a lot of time testing. So here you can see where this line is. This price level has been tested. We were going all the way back into almost a year, almost 2 years ago, when this pattern started forming. And look at this price level, how many times up, down, support, break support, resistance, back up again, back down, test, more test. And then the market finally breaks to the downside, then it comes back up, very close to that center line again. Well, look where it is. It's practically right back up to that center line, these highs back here from late in the year. And we've had a bit of a downward move here, but really look at this. We're really still in this humongous type of a range where we have, market coming up, testing these highs, uh, down, made a swing to the downside, back up, testing, testing, testing. So this gives us an opportunity to see where this important resistance is. Where does this market need to break through resistance in order to continue an upward trend? Or where does it have to break support in order to get a larger move to the downside? If we go back to our monthly charts that we looked at starting, we could see that big, huge range. And one thing that you've got to remember about ranges is that it's like, price is storing the energy. The more it coils, you take something and you coil it up, and then you let go of it, it springs open. A lot of presentations I do, I have a slide of water, like if you take a rock and you drop it in the water, the ripples that go out. Well, depending on the size of the rock that you drop in the water is going to determine the size of the ripples, the amplitude of that move. And it's the same thing with prices. Prices are really just energy. They're by the market participants and how strongly, the market moves up and down. So we have a bit of an upward bias, recently from late last year in the Dow, and it's sort of been holding in here. But I think this level right here, and especially these lows, are going to be really important for the Dow to hold. And then on the upside, we've got this center line right here. So the Dow has got to be able to get above this price level and start to make good strong closes above it in order to make new highs. So there's not really, there's some indicators that you can use to help you determine maybe when a breakout is coming. It's hard to predict a day and a time, but there are some things that can help you kind of get closer to it. Okay, so now, first, let me check for a couple questions and see. No. Oh, okay, those are you guys talking. Okay. Okay. Oh, hey, thanks on that. Awesome. I miss CMT. Well, thank you very much. I should have brought the picture of the books that I had. It's a pretty funny picture. Okay. All right. So let's go on now. I just closed that chat, so I hope if there's something new, it'll come up. All right. So let's take a look at a few things now. Let's see. Let's take a look at, I'm going to take a look at the crude oil market. Go through some of these quickly. It's talking about ranges. So I think this is a good one. Okay, so here we've got a retracement here, low to high on crude, made a big high up here. Uh, Started making, these are actually sell patterns in here. These are retracement types of patterns. And then the market turns down from there. So here's an example, the 382, not really holding very well. Notice how it comes through it. A little bounce up. So here's some resistance right in that area. I'm going to move this up a little bit here, and then moves down to the 0.50 retracement. And you can see how crude oil has just been hovering. Recently, it dipped through a little false move, false break to the downside, and now back to the upside. So here we have a coil. So whichever way this goes, we'll probably see a bit stronger move. But because we have this big leg to the downside, I would only be expecting, a retracement back up. You can do a bit of a measured move. That would bring it back up around the 50, and you can see all the resistance back in here. So maybe back up towards the mid 90 level. If it got to the 618, back towards the $100 a barrel level. But I think this is going to get just, if it breaks this resistance to the upside, I think we'll see the move up, but I would not be expecting to see crude oil go to new highs. Again, I just don't see it on this chart, but I see some nice swings for trading on there. So you can kind of use this to figure out when to fill up. I see it's something in the chat. Oh, gold and silver. Oh, I was just going to pull that up, Michael. So let's get to it. Let's take a look. Okay, so gold on my I have a weekly market setup. It's a live video that I do every week for subscribers, and so I point out things that directionally patterns and things. So back here, back in this area, I was saying that gold looks like it is uh, going to be moving to the upside, and one of the tools we used was this trend line here. So you can see how gold broke the trend line. So notice how here we are up at this 886. There's the last chance fib retracement on here. So um, it looks as though there's still some underlying strength in the gold market to me, but it's ready for a pull, ready for a pullback. So I would be watching for some type of retracement pattern on this, maybe the ABCD pattern, maybe some other type of retracement consolidation pattern, but closing right above this level here, 2040. And I think gold is likely to get at least to this 1.0, exceeding that, then up to the 1.27. But I'd be watching for a retracement on this first. Silver. Let me use SLV for silver. Hang on, let me go find it. It's on here somewhere. Silver is sometimes a little bit different uh, than gold. They're very highly correlated, meaning they tend, if gold's moving up, silver's moving up, but sometimes they're not always moving with the same strength, with the same momentum in that direction. When gold started to the upside, back in this area, silver was much slower to get going. And when it did get going, it didn't get as strong of a move to the upside. So you can see here, so here's a ranging pattern. Here's a ranging type of a pattern on silver. I'm just going to kind of draw it in because you now want to use that as a reference point for price. So here's our highs. So now we've just put some structure into the market where we can analyze this price much, I think, much better than without having it on. Because we can see that the market broke below that. It had a, nice, if you're short that market from this pattern, had a nice move to the downside. Look where it went back into this gap area. It did not fill the gap, however. So that was a sign of strength right there, making these really important lows. So now it's broken above uh, this upper resistance, this upper trend line here. So it looks like it's just testing it right now, but the RSI might be a little bit on the overbought area and it needs a bit of a break. I think same thing as with gold, probably watch for some type of retracement pattern, see if it can hold this area. When you have a pattern such as this, it's okay for price to come back in a little bit, but you don't want to see it coming, like, remember our center line, you don't want to see it coming in really deeply back into that pattern. But I think with a little bit of a rest, I think silver will probably come up and challenge. Here's a gap here, some highs here, and some highs in this area as well. So I'm just going to read your gold miner ETFs. View the K1. Oh, okay, cool. That's good. That's good to know. That's really nice. I mean, some people will check the chat there and see that. They'll see it on this video. So cool. Okay. Yeah, I was looking at uh, some of symbols for gold and silver yesterday, and noticed that a lot of them have just really been moving. So if we use the principle of the AB equals CD pattern, like here, this possibly will turn into an ABCD cell pattern. So that gives a potential target of that 24, which is again right around that gap area, right around these highs, getting back into this level here. And if we kind of give us some more price data to look at, Look at where that is. That's coming back into just a boatload of resistance for the market. Doesn't mean it'll never get through it, but generally what happens, just like we looked at on the previous charts, is that they tend to test, right? It comes up and goes, oh, ouch, I was here before and this happened. And so it tends to get some play around those areas. Right now, this particular pattern, the way this AB leg is formed compared to how the CD is formed, notice how the price was hovering around this line and look how far away that it is. So this is showing that there's strength, that there's more upward momentum. And so even if it does get here and gets a little play, it could then move higher to this 127 level, which is back testing those highs. The RSI is showing some nice strength right now, but again, it might be a bit on the overbought side and need a little bit of a pullback. Great, thanks for asking for those charts. Okay, I want to look at Amazon. Let's find out if your packages are going to be on time. All right, so Amazon. This is one I've been covering for over a year, almost a year and a half. And Amazon was having some real problems with the price behavior up here. And here's the ABCD sell pattern, retesting those highs. And the market just really fell out of bed. This level right here, this 80 level, is a very important level for Amazon. So you can see it's come down. This is ABCD buy. This is actually a little butterfly buy pattern here. This is a reversal pattern. Market reversed to the upside. Got up into this gap area and then back down again. So this looks to me like this, first of all, this resistance here, and of course these highs, these are the ones it needs to get a bigger move to the upside. But this looks like a potential basing pattern that is occurring. And basing patterns can, again, it's hard to say how long they are going to go on for. Microsoft was in a basing pattern for, I think it was, is it 613? I mean, years. It was years and years and years after after it crashed down. And there was a very long basing pattern. If you look at a market like even US steel and you go out to a weekly, monthly chart, you'll see very long basing patterns on those. But what you also see with those is huge moves when they're done basing. So this one's not an extremely long basing pattern. It is several months and we can see where support and resistance is. In fact, I can even make a second, I'm going to make a second line right here. And then we have this down here, support. So this is how I would put some structure in here. So eventually it's going to move up or it's going to move down out of here. So our RSI right now is not, it's not on the bullish side. It's not extremely bearish right here, but it's not really bullish. If price moves this way, the RSI has got to start moving above these peaks and get back up above this 70-ish level. Okay, so that's what's happening in Amazon. How can we live without Amazon these days? All right, let's take a look. I see another thing in chat. I just want to make sure. Okay, want to make sure I wasn't missing a question. So let's take a look at Bitcoin, but let's use the symbols GB. I'm going to use GBTC. I want to show you the history here. So, okay, so here's a huge basing pattern. See from here, you had spike up and then back down, huge range for 70, 18, 19, 20, 21, 20. So about 2.5 year range. And then look at the move out of that range. And this, I mean, this could be any symbol. I mean, I could take the symbol off, take the prices off, This is classic price behavior. So the market starts to trend to the upside. This was a very parabolic move. If you look at my vertical cursor, look at how closely that matches. That's like a straight up move. And then it had a retracement down. Hang on. This was a ABCD retracement. I should learn this pattern. There we go. Remember when I said that the A, B, and CD are not always exactly equal? CD can extend a bit. So here's an example of that where it extended to the 127, and then another and final leg to the upside. And then all kinds of sell patterns were forming in here. Here's the center line of this range that formed, broke to the downside, test, come back up, center line, formed a big ABCD cell, back down, and notice how, just before it fell off a cliff again, it retested that center line and back down. And so now down, down, down. So now look what we have, a big basing pattern. So until it breaks the resistance with some momentum to the upside, is probably not going to get too far. And it may just flutter around here. Breaking below these lows, probably not a good thing. So right now it's still just hovering within that big range. And ETH is about the same. So I'm just about out of time. So if you don't mind, I just want to show you one thing. Let me make sure I'm not missing a question. Let me check the tax chemicals over. Cool, great, thank you. That's great. That is great information. Thank you. Okay, but I wanted to show you guys real quick. So the link that David posted at the beginning, David, if you're still here, still awake, if you wouldn't mind reposting the link in the chat. This course is a 7.5-hour course on these patterns and also the history of Fibonacci ratios. The master chart tips is at the end of each section. And this is when I go to my live charts and I show you the information that was in the educational content, the videos. And I show you, what this looks like on live charts, what you're likely to see. It seems like there's always a gap between reading books and or studying courses, and then you have your live charts and you're like, I don't know what I'm looking for. So I'm trying to fill that gap with these courses. So the ABCD buy pattern, that is a core pattern. I call these power patterns. And this, I spent 6 sections on it. And we start with the structure, drawing, labeling, the important characteristics. Symmetry, just showed you how the price was, much steeper, and asymmetry, multiple patterns within patterns, warning signs, and the master chart tips on here. And then once we get that structure down, then we can add a couple more patterns in there. The Gartley 2-2 pattern is a retracement pattern. When you have a new uptrend or a new downtrend, this is a classic pattern. And also we go on to the powerful butterfly reversal pattern. This pattern is one that, people know it, but I don't think they know the nuances of it that I show you with all of these patterns. And then another pattern, the 3-drive pattern, 3 ways to use a 3-drive pattern. And then I talk about, after the master chart tips, the next steps that you might want to consider. And then you'll get this PDF book also as well. So let me check and see if I've got anything else because my time's up. Okay, cool. Okay, thanks again for that information. So thank you for joining me today, David. Thank you so much for the invitation. I enjoyed showing you the charts and some price structure and patterns today. So please feel free to email me. If anybody has any questions, you can find me at Trading Live online.